There's a lot riding today on Nvidia, and what CEO Jensen Huang says with his keynote speech expected in the afternoon. He normally tends to announce new technologies, new products, and what that will mean for the outlook going forward. The conference is actually so important for Nvidia's stock that strategist, I think it was the team at Bank of America, I might be wrong there, but they called it the AI Woodstock. And that just really shows
the Glastonbury. I love it. The Glastonbury.
It really, it's a festival of sorts for the AI industry. But again, just to really illustrate how important this is, not just for Nvidia, but the whole stock market. The stock actually rose, despite it being a very volatile week. It actually rose for a 10th week last week, which is a record streak of gains for Nvidia.
I mean, I've been getting like memes on Nvidia, I have to say, all weekend, or like little snippets out of what we can expect from Nvidia. I mean, are we thinking about new products, or will they just explain how they will expand in the future?
I think it's a mixture of all those things, to be honest. I think definitely people will be going to be looking for cues from the CEO keynote about whether this $1 trillion addressable market they talk about is going to get even bigger, and where beyond the kind of current demand that's going to be driven by. But I think more crucially, obviously, we see a lot of noise from their rivals, kind of AMD, even Microsoft, Google, Apple, developing their own chips. What can they do to continue to stay ahead of the pack? And so there's a couple of things there. There's the new product. So I think the one that's really in focus is the B100, which is the next generation to the H100, which has been the thing that's really driven the stock in the last 12 months or so.
So what exactly is that, Matt? It's basically like a microchip that can do more advanced things.
Yeah, exactly.
Like biotech,
so I think it's just a more powerful chip, essentially, kind of potentially using kind of smaller, kind of nano, like kind of denser circuitry, so giving them more power for essentially for lower energy consumption. So the kind of next iteration, and that's due to come out this year. So I think people are going to be looking to see when that's actually going to be available, and whether current customers are going to wait for that to arrive, or they can continue to buy H100 chips. And then there's this question about their development cycle. So they've currently been on a 2-year development cycle, and there's talk that they're going to go to a 1-year development cycle. So that will essentially speed up the rate at which they bring new product to the market, and potentially continue to allow them to keep a competitive edge over these rivals.
Well, AI has been tipped to be a game changer for most industries, but banking may not be the first that comes to mind. Though financial and bank services comprised a quarter of AI spending in 2023, amounting to around $154 billion. That's according to Wells Fargo, who says we're just about to see that investment start to pay off. Mike Mayo is managing director and head of U.S. large cap bank research at Wells Fargo. He's the one who gave us that number, and he's here with us in studio. Mike, it's great to see you.
Nice to be in this new modern studio.
Thank you so much.
Yes.
Appreciate it. So you put out this large piece of research on this, and I have to admit, I'm one of those who I did not think of banking first off when you think about AI spend. But I'm curious, concretely, what kind of changes are customers going to see, and what kind of efficiencies are these banks going to get when it comes to AI?
Well, shameless plug for my hobby of weightlifting. I have a barbell strategy. We have the best-in-class JPMorgan as my number 2 pick, and the worst-in-class Citigroup as actually my number 1 pick. Yesterday, we hosted a New York City conference, and we had the head of JPMorgan's head of AI, basically. And I think JPMorgan could wind up becoming the Nvidia of banking, because they are Goliath. Goliath is winning. They have more data than anybody else. They've been at this for a decade. They've extracted AI from the rest of technology. They're going through all sorts of use cases. Only 1 idea out of 3 makes it from lab to production. And they should see they targeted $1.5 billion of benefits last year, which would be a doubling from every year since 2020. And so they have the resources, the spending, the data, the processes, and the people in place. And I think you guys reported that Jamie Dimon said this will have unbelievable potential. Maybe they'll split it off as a separate business line one day. But JPMorgan has optionality, and they start from a position of strength more than any other bank. So that's your best-in-class example. Mm-hmm. My worst-in-class example, the other side of the barbell, is Citigroup. They've had worst-in-class returns, efficiency. They've fallen short of all sorts of targets. And for there, it's more basic. At my conference yesterday, they invoked Conway's Law, which says that your technology architecture is a function of the architecture of your firm as a whole. So Citi has sold off businesses. Now they've simplified the firm. They'll be done with their org simplification 2 weeks from this Friday. And then that allows for more simple technology to which they can add on AI. So different examples of how two firms are approaching it. But for the industry as a whole, it should be able to take banking efficiency toward record levels. So the most obvious use cases are coding. This ancient COBOL code, you know, even I learned back when I was a computer science major, you can transition from COBOL code to C++ or Python in a very precise manner. So AI is very good at doing that. And then all of us are going to have AI co-pilots to make us more productive.
Okay, so just a quick follow for you, and it's a selfish follow, I have to admit. I'm a Citi customer, a longtime Citi customer, and I had occasion to call the bank yesterday with a question. And I got an automated system. And man, did I go down a rabbit hole, so much so that I had to hang up and start over again. It just seems like there's so much low-hanging fruit when it comes to things like customer service. Are they taking advantage of that as they should be once they do that simplification process?
You know, the good thing about Citi is well, the bad thing is they failed the last 12 restructurings.
Right.
This is restructuring number 13. I think
Lucky number 13.
For Citi, everything's upside down, okay? But this one is different for two reasons. Number one, they're selling off businesses equal to 10 to 15% of revenues, so that simplifies them. And they're going from this matrix, multinational, mishmash structure to 5 lines of business: services, banking, markets, consumer, and wealth. And those 5 heads report to the CEO, Jane Fraser. So now, when you ask a question like, how's customer service? Well, how is it in each business line? So services is the #1 player in global wholesale payments. So that looks good. Credit cards, you know, they're a top 3 player. And you see with the Discover acquisition, that's a value. Banking and markets is a player, and wealth is a player. But they have a lot of work to do, you know, in consumer U.S. banking. That is a whole. The wealth business, that's kind of a whole, but that's 20% of the company. So is the glass 80% full or 20% empty from a strategic standpoint? And you don't have to wait forever, I think. This year, they've given the best guidance for revenues to expenses than any other large bank. If they simply meet their targets, I know that's a big ask for Citigroup, if they simply meet their targets, they will probably have some of the best, you know, year-over-year performance of any large bank. So sometimes it feels like, in recommending Citi as my #1 pick, I have hundreds of pounds on my back, you know, and I.
But you've had some recent experience with that, so it's okay.
So but as long as we can lift that weight, and I think they are going to lift that weight, and I think Jane Fraser, come 2-3 years from now, she has a risk of being fired if she doesn't improve the returns, but she also has a chance to become Banker of the Year.
Welcome back, investors. Today, we've got an exciting update on the AI revolution that's taking the world by storm. We just witnessed a captivating CNBC segment that delved into the pivotal role of AI in the banking industry and the highly anticipated Nvidia event. But that's just the tip of the iceberg. If you thought AI was just about chatbots and image generators, think again. This technology is poised to disrupt virtually every industry, and the financial sector is already feeling the shockwaves. From coding to customer service, AI is set to transform the way banks operate, promising unprecedented efficiency and productivity gains. Special thanks to Mike Mayo, the Managing Director and Head of U.S. Large Cap Bank Research at Wells Fargo, for shedding light on the staggering $154 billion that banks are investing in AI this year alone. That's a mind-boggling figure, and we can't wait to uncover the exciting developments that lie ahead. Thank you for tuning in to InvestMinder. If you haven't already, be sure to subscribe and hit that notification bell to stay up to date with our latest investing videos. We're committed to bringing you the most insightful and engaging content in the world of finance and technology. Disclaimer: please note that we are not professional financial advisors, and this content is for educational and entertainment purposes only. Always conduct your own research and consult with qualified professionals before making any investment decisions. Now, let's dive into the heart of this AI revolution and explore how it's transforming the banking industry and beyond. In the world of finance, data is king, and no one understands this better than JPMorgan Chase. As Mike Mayo aptly described, this banking giant could very well become the Nvidia of banking when it comes to leveraging AI's potential. With a decade of experience under their belt and an unparalleled wealth of data at their disposal, JPMorgan is well poised to lead the charge in this AI revolution. But what exactly sets JPMorgan apart? For starters, they've taken a strategic approach by separating AI from the broader technology umbrella, allowing for a laser-focused effort in this domain. Their rigorous process involves meticulously evaluating countless use cases, with only 1 out of every 3 ideas making it from the lab to production. This level of scrutiny ensures that only the most promising and impactful AI solutions are implemented. The results speak for themselves. Last year, JPMorgan targeted an impressive $1.5 billion in benefits from their AI initiatives, doubling their gains from previous years. This trajectory is nothing short of remarkable, and it's a testament to the bank's unwavering commitment to innovation. JPMorgan's AI aspirations extend far beyond mere cost savings and operational efficiencies. CEO Jamie Dimon himself has hinted at the unbelievable potential of this technology, even suggesting the possibility of spinning off their AI efforts into a separate business line down the line. Such a bold move would undoubtedly solidify JPMorgan's position as a trailblazer in the AI space. What's driving this success? According to Mike Mayo, it's a potent combination of resources, spending, data, processes, and talent. JPMorgan has the financial muscle to invest heavily in AI research and development, as well as the vast troves of data required to train these sophisticated models. Moreover, their well-established processes and the caliber of their AI team ensure that these investments translate into tangible results. While JPMorgan is undoubtedly a frontrunner, the AI revolution in banking is far from a one-horse race. As we'll explore in the next section, other players like Citigroup are taking a different approach, one that highlights the unique challenges and opportunities each institution faces in this rapidly evolving landscape. While JPMorgan Chase is leading the charge in the AI revolution, Citigroup presents an intriguing contrast. As Mike Mayo pointed out, Citigroup finds itself on the other end of the spectrum, earning the label of worst in class when it comes to efficiency and returns. However, this apparent setback could be the catalyst for a remarkable turnaround fueled by the transformative power of AI. Citigroup's journey with AI is not about staying ahead of the curve, it's about playing catch-up. But this isn't necessarily a disadvantage. In fact, it could be the driving force behind a much-needed simplification process that paves the way for a more streamlined integration of AI technologies. According to Mayo, Citigroup's struggles can be partly attributed to Conway's Law, which states that an organization's technology architecture is a reflection of its overall structure. Over the years, Citigroup has undergone various reorganizations and divestments, leading to a complex and fragmented landscape. This complexity has undoubtedly hindered their ability to adopt cutting-edge technologies seamlessly. However, Citigroup is now embarking on a pivotal restructuring initiative, the 13th in its history. This time, the stakes are higher than ever, as the bank's leadership recognizes the urgency of embracing AI to remain competitive. By selling off businesses accounting for 10 to 15% of its revenues, Citigroup is streamlining its operations, transitioning from a convoluted matrix structure to 5 distinct business lines: banking, markets, consumer, and wealth. This simplification process is critical as it will allow Citigroup to lay the foundation for a more cohesive and agile technology infrastructure, one that can seamlessly integrate AI solutions. As Mayo aptly stated, now when you ask a question like how's customer service, well, how is it in each business line? Citigroup's AI journey may be more about catching up than staying ahead, but this doesn't diminish the potential impact it could have. The bank's consumer banking and wealth management divisions, which collectively account for 20% of its business, present significant opportunities for AI-driven transformations. Imagine a future where Citigroup's customer service is elevated to unprecedented levels, thanks to AI-powered chatbots and virtual assistants that can handle complex queries with ease and efficiency. Or envision a wealth management platform that leverages AI to provide personalized investment advice and portfolio optimization tailored to each client's unique needs and risk profile. While the road ahead may be challenging, Citigroup's commitment to simplification and AI adoption could very well be the key to unlocking its true potential. As Jane Fraser, Citigroup's CEO, navigates this crucial phase, she faces the dual risk of failure and the tantalizing prospect of being hailed as the banker of the year should she succeed in turning the tide. Beyond the tales of JPMorgan and Citigroup, the AI revolution in banking is a multifaceted phenomenon that promises to reshape the entire industry. From coding and data analysis to risk management and fraud detection, the applications of this transformative technology are vast and far-reaching. One area where AI is poised to make a significant impact is in the realm of legacy systems and outdated programming languages. For decades, banks have relied on archaic code bases such as COBOL, which has become increasingly challenging to maintain and update. Enter AI with its ability to precisely translate these antiquated codes into modern, more efficient languages like C++ or Python. Imagine the potential for increased productivity and cost savings as banks no longer have to grapple with the complexities of maintaining legacy systems. AI-powered code translation could pave the way for streamlined operations, allowing financial institutions to focus their resources on innovation and customer experience. Moreover, AI is set to revolutionize the way banks approach customer service and engagement. Gone are the days of frustrating automated phone systems that leave customers feeling lost and helpless. With AI-powered virtual assistants and chatbots, banks can provide personalized, around-the-clock support that understands natural language and can resolve even the most complex queries. But AI's impact extends far beyond customer-facing applications. In the realm of risk management and fraud detection, machine learning algorithms can analyze vast amounts of data, identifying patterns and anomalies that would be nearly impossible for human analysts to detect. This proactive approach could help banks mitigate potential losses and safeguard their customers' assets more effectively than ever before. Furthermore, AI's ability to process and analyze data at unprecedented speeds opens up new possibilities for investment management and portfolio optimization. Imagine a future where AI-powered robo-advisors can provide tailored investment strategies based on each client's unique risk profile, goals, and preferences, all while continuously monitoring and adjusting portfolios in real time to capitalize on market trends and opportunities. As we explore the depths of AI's potential in the banking industry, it's essential to recognize that this revolution is not a one-size-fits-all phenomenon. Each financial institution will need to navigate its own path, leveraging AI in ways that align with its specific needs, challenges, and organizational structure. For some, like JPMorgan, the focus may be on maintaining a competitive edge and pushing the boundaries of what's possible. For others, like Citigroup, the journey may involve playing catch-up and using AI as a catalyst for much-needed simplification and optimization. As we approach the conclusion of our exploration into the AI revolution sweeping through the banking industry, one thing becomes abundantly clear: the future is now, and those who fail to embrace this transformative technology risk being left behind. The tales of JPMorgan and Citigroup serve as a microcosm of the broader AI landscape, highlighting both the immense potential and the unique challenges that financial institutions face. While JPMorgan stands as a beacon of innovation, leveraging its vast resources and data to forge ahead, Citigroup's journey underscores the importance of simplification and adaptability in the face of disruptive change. Yet, regardless of their current positions, one thing unites these banking giants: the recognition that AI is no longer a mere buzzword or a distant possibility. It is a present reality that demands immediate action and unwavering commitment. As we look ahead, the AI revolution in banking promises to redefine the very fabric of the industry. From streamlined operations and enhanced customer experiences to more effective risk management and data-driven investment strategies, the applications of this technology are limited only by our imagination and willingness to embrace change. However, it's crucial to remember that this revolution is not exclusive to the financial sector alone. AI is poised to disrupt virtually every industry, from healthcare and transportation to manufacturing and entertainment. Those who fail to adapt risk being rendered obsolete by the relentless march of progress. So, as we bid farewell, let this exploration serve as a rallying cry for innovation, a reminder that the future belongs to those who dare to dream and act boldly. The AI revolution is upon us, and the time to seize its potential is now. Thank you for joining us on this incredible journey, and remember to subscribe to InvestMinder for more insights into the cutting edge of finance and technology.
Thanks again for watching, and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.